Hey guys, and welcome to another edition of Swinging Sunday Scan for February the 6th, 2022. The plan today is to go over the markets and get an idea of a direction. I want to talk briefly about the ES, which is the Futures S&P 500, and multiple time frame analysis. I'll quickly go over some of the previous ideas called, and I will rapid fire 20 new ideas. If any of this content helps you in any way, can you please do me a big favor? Can you hit that like button? If you want to see more content like this in the future, hit subscribe, click the bell, and you'll get notifications for any new content I put out. Let's get right into it, guys. Alright, looking at the markets, the SPY. Last week we were talking about a potential bounce with a reversal to the downside. And, oh, hang on a minute. This is 2022. Okay, hang on. All right, hey guys, here. I got the wrong chart up there. It was a bit earlier. It was in 2022. Got the right chart up here. Last week we were talking about a decline and a bounce. Bouncing right into the bottom side of those moving averages, looking for hang on, no, that's this is September 29th, 2020. Okay, hang on. All right, hey guys, I think I got the right chart up now. Like I was saying last week, we saw that the market was in a downtrend, and we were looking for a bounce into a resistance area and a possible rollover with hopefully a long extended bear run. The market it's way overdue, and this has got to be the one. Oh, hang on a minute. Oh wait. This is September 2021. Okay, hang on. This is the wrong one again. Give me a sec. Okay, hey guys. Long extended bear run. Looks like could be on the cards. Market so extended. We got a bit of a. Oh, hang on a minute. Nope. December 2021. Okay, hang on. Okay, finally. I double checked the dates. Okay, we're at February 4th, 2022. Sorry, try my hand at comedy there, but I hope the point came across is we've seen this before. Okay, the market tends to put in these patterns that look like they're going to go lower, and we've just been disappointed many times with it not retracing and just going on and continuing this crazy bull run that is, seemingly unprecedented. So although the pattern looks really nice, and I'm really hoping and dreaming that we're going to get a longer retrace, let's not forget what this market is capable of. It can stay irrational for as long as it wants. So there's really no point in expecting it to do one thing or the other. Patterns are just patterns. Market will do what it does. The edge that we have as traders relies on our plan. So the market simply is an indicator of how we can exploit our edge and simply use the market to follow our plan. So for me, this looks like a great sell setup and a possible move lower. But really, the plan next week is to watch two levels. I'll be watching this 458 area, and I'll be watching this 444 area. Simply put, if we significantly break the 458 area, I would consider this short pattern potentially broken. Keep in mind, the SPY is pretty sloppy, and we might see some topping tails that pop over that area maybe 1 or 2 days. But a break above that area, I'm looking like this potentially could be a broken pattern. Anything that breaks below the 444 area, I'd be looking at a valid short pattern. So something I wanted to talk about real quick is the difference between using the SPY and the ES futures. I switched over to the ES, And for some, this might look almost identical. For some, this might look a little smoother. In short, the ES has different trading times and trading hours than the SPY. And this ES ticker actually has more trading information than the SPY. The reason being is the SPY is not trading overnight when the stock market is closed. Also, the SPY, the daily candles, typically only show the regular trading hours and don't include the extended hours, which has even less trading information than the ES. So the S&P 500 E-mini futures basically trades all the way up till 4:59 p.m., which is basically 5 o'clock, and reopens at 6. So the ES really only takes a 1-hour break and essentially trades all week from Monday to Friday with a 1-hour break on each day. So the ES really has a lot more trading information and generally has a lot smoother chart simply because the SPY has a lot of gaps because there's less trading information. So the other thing I wanted to quickly talk about was multiple time frame analysis. Let's look at the 1-hour chart on the SPY. This chart looks pretty sloppy. There's a lot of overlap. There's these big topping and bottoming tails. There's really no indication of any kind of solid downtrend other than the stock just kind of going down over the last couple days. So let's look at the ES. So to me, this is a way cleaner chart. We can see a big drop here on February the 2nd. We have a clean consolidation with another drop, a big rally here with a bit of a consolidation, a rally to this area here with a drop. We have a lot of indecision and chop here on February the 4th. We have a rally back into this trend line here and another drop. There's a lot more information and useful information, in my opinion, in this chart. So sometimes if the SPY seems to be really sloppy and not quite making any sense, I suggest looking at the ES chart for a cleaner chart. And this especially comes into play in this example, where if you're looking at the 1-hour chart, you're getting a lot more useful information on the 1 hour with the ES. Onto the QQQ. The story here is basically the same thing. Last week I was talking about this 380 area as a really great area where two supply areas were coming into alignment. We didn't end up getting up to that area. I did draw a second supply area around this 370 area. So if we're considering the QQQ putting in a rejection around this area and pulling back, I'm basically looking at the QQQ the exact same as the SPY. Anything below 352, I'd be looking at a continuation of this short pattern. Anything above 370, I'd be looking at this pattern being broken and basically watching to see what will happen in the next few days to come. That's my take on the markets, guys. Let's look at some previous ideas. BSIG. This was one I was in. I took this short around 24.51. And I'm kind of embarrassed to say I got out on earnings day at around 23.35. Now I hope everybody's going, well, why did you do that? You have said never hold through earnings about 100 times so far on the first 5 episodes of this channel. And you are correct. I don't have an excuse. I simply forgot. Not only that, I intended on getting out half my position around the 2R area, which is around $20, and I also did not do that. I have a lot more I could say about this trade, and I may be posting a full review of my thoughts on how I managed this trade, which was poorly. I'll leave that for another video. Let's move on. RGR, this is one of the remaining shorts that I'm currently in. Nothing much to say here other than it's moving really slow. I moved my stop down to 68.15, so basically break even. Can't lose on this trade unless we get a gap. We have earnings coming up, estimated February 23rd, so we still have some time to sit in this trade. Last week, I called a bunch of longs. I chose 3 longs to be in. This was one of the first ones, PRAA. This one was a disappointment. It popped and dropped in 4 days. I think I still probably would have taken this trade even though it didn't work. On to the next one. STZ was the second one I chose to take. This one got off to a little bit of a slow start. We're currently sitting at break even. I'll be hanging on to this one as basically insurance if the market decides to rally instead of going lower. EXTR, I also entered this trade into my platform. However, for some weird reason, I never got filled. I think that spike above the entry area was really thin or happened too fast for the broker to fill my order. I currently don't have a position in this stock. However, because it didn't break my stop, my order will remain in the system until I decide to cancel it. I called a bunch of other longs last week. None of them really did anything of significant. SBNY was really the only one that got off to a decent start, basically hovering around the 2R area. Sadly, not in this one. LYV, decent start, again, not in this one. VMC, this one looks very similar to the one I got stopped out on. PRAA. ARW was invalid because we were so close to earnings, so this one I would not have you considered taking, so nothing of interest here. REYN, wow, what happened there? This again was one that I wouldn't have taken because of earnings coming up, but look at that red bar. This one would never have triggered because I was waiting till after earnings anyways, so nothing really to see here. NNI never triggered because it broke the planned risk level before it triggered the trade. And POST, this one is worth talking about. Man, I'm getting bored of talking about earnings, but look at that bar. It basically engulfed my entire risk area and some. Let's go deeper into this daily bar just to see what would have happened if we took this trade. So this is a 15-minute chart. This stock was reporting earnings on the evening of February the 3rd, which was the night before this day that we're currently looking at, which is February the 4th. At the market open, this stock at one point hit a high, which is above where my entry would have triggered at 106.69. It rallied and then immediately tanked all the way below my risk level at 103. So basically this swing trade would have entered me in and would have been stopped out within the first 45 minutes of the market open. Typically my swing trades, I can hold a swing for anywhere between 1 to 2 days, sometimes 2 to 4 weeks. So this would have been a pretty annoying trade, but again, another lesson on why we don't hold through earnings or we don't trade through earnings. There will be a rule in my plan where I will not be entering trades the day after earnings have been announced. And this is just another reason why I'll never do that. Your main job as a swing trader, or any trader for that matter, is risk management. As a swing trader, the biggest risk to our account are gaps. The biggest catalyst on any stock, on any chart, is earnings. Down to the heart of it, it really is news that causes these gaps, but earnings is planned news. That's exactly what it is. We know that the company is going to send out new information, which is their financials, on a given day, and that catalyst typically leads to gaps. And again, finding out forecasts, figuring out which way the stock might gap through earnings is a losing strategy. At best, it's a strategy that I've never seen any trader master, and it's a strategy that every trader I've heard talk about is always the same. Never hold through earnings. All right, let's get into some new ideas. All right, a couple things, guys, before I go over the new ideas. Last week, I called a bunch of long ideas, and honestly, I felt it a bit of a challenge to find long ideas last week. This week, I was looking for all short trades because I'm already in one long and potentially a second one if it triggers. I can't tell you guys how many ideas hit my scanner when I was looking for these short setups. So one thing I will say, all of these aren't pure quality trades. I literally just threw everyone in my watch list, basically met most of my criteria, and before market open, I will be filtering it down to potentially my top 3 to 4 ideas and actually enter those into my platform. But I wanted to get these out there as trade ideas, and if at all you guys find any of these ideas helped you guys out, please hit that like button. It would really help me out. And this week, guys, I'm actually going to try and rapid fire these as fast as possible. And I'll go over 3 of the ideas and talk a little bit in more detail about them. CCRN, SKY, MBI, TNYA, BROS, IAS, RLYB, CELH, IPI, XM, ENTG, WMS, HRMY, MCFT, CARG, RVLV, DH, NUE, TTEK, and finally WD. My goodness. First one I'll talk about is CCRN. Basically looks like we're heading into the supply zone. Real unfortunate that earnings is not that far away, but if we get a decent drop with the market, this one might not need that many days to get to target. RLYB, again, similar story. We're heading into a supply area. This one's bouncing with pretty smooth daily bars. Earning is not that far away, but again, if we get a decent draw to the downside with the market, this one might not need that many days to get to target. And the last one I'll talk about, WMS. Oh my goodness, it's the exact same idea. The one that makes this really cool is count it 1, 2, and 3 tests of this area, and look, it even matches up with this prior pivot in July of 2021. The bounce on this is the smoothest bounce, I would say, out of all the stocks we looked at, and the range so far on the stock has been really good. We've cleared earnings, so we have a lot of days to be able to hold this to the downside. This one looks pretty good, but we'll see what happens. I do have a couple bonus Canadian TSX trade ideas that I've been looking at. WELL, I had some success in last year. It is currently bouncing close to that red 50 period moving average, and we are heading into another supply area. This one I'm not super keen on, but I might make a game time decision to get into this one. We'll see. This one's not really an idea, but maybe just a notable mention. Loblaws. I've been watching this stock on this unbelievable rally since February 2021. I've been watching and waiting and hoping for a big pullback to possibly buy some of this stock at my long-term dividend investment portfolio, but I never got a big pullback. We finally got a big retrace on the daily. I mean, on the weekly, it was very small, so nothing major, but the bounce on this was so smooth. Hindsight's 2020. This could have been a decent swing trade opportunity for us to buy it right over here. My plan would have said I could have entered here on January 25th, right over top of this, the highs of this daily candle on the 24th. Didn't hit 3R yet, but it's pretty close. It's around 2.6 right now. Look at where it bounced right near that demand area. Feeling some regret looking at this one, but you're not going to catch them all. The part that stings on this one is I've just been watching this stock for such a long period of time and might have missed an opportunity here. Oh well, on to the next. TELUS, I believe this was an idea I mentioned previous weeks. Looking for a breakout over the $30 area. We did get a breakout over this area. It was so close to earnings that I really didn't feel like it had enough time to get even to 1R. In this case, it did make it to 1R. Earnings is estimated February the 10th, which is basically, I believe, the end of next week. And really, the trade idea you're looking at right now is really the tightest possible stop on this one with a higher risk of getting stopped out. So I don't really think I would have took this trade. No real regrets here. I was just hoping we would be able to consolidate under that $30 area until after earnings and possibly look for an opportunity then. It didn't wait for us. It went without us. See you later, TELUS. This one's not an idea, but just a similar pattern of what I was expecting TELUS to possibly do. This is CNQ, another TSX stock, broke out over this consolidation around the $55 area. And you can see after a prolonged flat top consolidation breakout, you tend to get pretty big moves in this case. So we'll see what happens with TELUS. Earnings coming up, so it could do something crazy, but just to give you an idea of what my thought process was when I was looking at that stock. Thanks for watching, guys. I really appreciate it if you made it to the end of this video. If any of this content helped you out in any way, please hit that like button. Write down in the comments if you have any suggestions, any feedback. If you want to see more content like this, please hit that subscribe button. Hit the bell if you want to get notifications anytime I upload new videos. The market, to me, guys, looks like it's heating up. I have a feeling we're going to see a lot of volatility in the next few weeks, possibly months to come. I'm pretty excited. With volatility comes opportunity. Will we get a bear market? Will we go into all-time highs? Who knows? This is the market. It's crazy. Let's go out there and find opportunities. Thanks, guys, and we'll see you on the next one.